Trading inconsistencies? Here's the fix. Trading is a journey filled with both highs and lows. For many experienced traders, success isn't just about hitting the big wins. It's about staying consistent and disciplined in the face of market volatility. You know strategies. You've seen your share of profits and losses. But sometimes setbacks rooted in inconsistency can shake your confidence and impact your long-term success. If this sounds familiar, then this is your wake-up call. In this video, we'll uncover how to fix trading inconsistencies permanently. You'll learn to identify where things go awry, create a fail-proof framework, and adopt a mindset that helps you stay focused, no matter how unpredictable the markets get. Let's build that foundation for long-term success and put the roller coaster behind you. Before we fix the problem, we need to understand it. Trading inconsistencies don't just appear out of thin air. They stem from habits, mindsets, and behaviors that undermine your abilities. First, there's emotional decision-making. Even experienced traders can let emotions like fear or greed take over during volatile market swings. Maybe you let profits run too long, or you panic and sell too soon. Over time, these emotional mistakes add up. Then there's lack of preparation. Be honest. Have you entered a trade without doing the necessary research? Maybe you went in without a clear framework, hoping for the best. While some trades might succeed, inconsistency thrives without preparation. Finally, let's talk about overconfidence. When you've experienced success in the past, there's a temptation to trade impulsively, believing you've mastered the market. But trading isn't static. No 2 days are the same. Overconfidence can lead to mistakes when you underestimate risks or ignore evolving conditions. The good news? By identifying these root causes, you're already taking the first step toward consistency. Let's go deeper into turning awareness into actionable habits. A structured trading plan isn't just for beginners. It's a game changer for seasoned traders. Your plan acts as a guiding compass in the chaotic world of the markets. Without it, emotional and impulsive trading decisions will derail even the most skilled individuals. So, what exactly is a trading plan? It's your predetermined set of rules that govern every trade you make. This includes your entry and exit strategy, risk controls, and realistic profit expectations. Think of it as your personalized rule book, a system to protect you from yourself when emotions run high. Let's break it down. Entry and exit points. Define the exact conditions under which you'll enter or exit a trade. Whether that's tied to market trends, technical indicators, or price action, your decision-making needs to be crystal clear. 2. Risk controls. What's your maximum tolerable loss on a single trade? Decide in advance how much you're willing to risk and stick to it. This prevents you from compounding losses out of desperation. 3. Profit expectations. Forget the dream of hitting massive gains overnight. A disciplined trader sets realistic profit targets that align with their strategy and market conditions. As experienced traders, the risk lies in the temptation to wing it. You might think, I've done this for years. I don't always need a plan. But trust me, no matter your skill level, trading success comes from unwavering discipline. A plan reinforces consistency and removes guesswork. Make it your non-negotiable step before every trade. Having a trading plan isn't enough unless you commit to it. Execution is everything. You can have the perfect plan, but if you deviate in moments of pressure, inconsistency creeps back in. So how do you stick to your plan? Start with a checklist approach before entering any trade. Prior to clicking that buy or sell button, ask yourself, have I evaluated my entry criteria? Is my risk to reward ratio acceptable? Have I set stop loss or take profit levels? A mental checklist ensures every decision aligns with your plan. Next, let's talk about risk limits. One of the easiest ways to blow up a trading account is to overextend during a losing streak. Remember this. Managing your risk isn't about avoiding losses altogether. It's about controlling the size of the loss when it happens. Stay disciplined within your risk limits, no matter how tempting it may be to chase a rebound. Finally, resist the urge to trade impulsively. Markets can be turbulent, and volatility can trick you into chasing trades or revenge trading after a loss. Stick to your guidelines, and don't let one bad trade define your week, or even your day. Pressure is part of the game, but how you handle it determines your results. Experienced traders often deal with high-stakes moments where decisions must be fast but precise. So how do you maintain focus when emotions threaten to take over? Before the markets open, prepare yourself mentally. This doesn't mean just technical analysis. It includes adopting the right mindset. Treat every day as unique. Yesterday's wins or losses don't dictate today's outcome, so so approach the market with a clear head and solid preparation. One habit that sets consistent traders apart is journaling. After every trade, record your thought process, the rationale for your entries and exits, and the results. This helps you identify patterns in your behavior. For example, do you tend to hold winners too long? Are you prematurely cutting losses out of fear? Journaling is your mirror, helping you spot and correct flaws in real time. Consistency isn't built in a day, it's honed over time. Regularly review your trades to assess what's working and what isn't. This periodic reflection keeps you accountable and ensures you're refining your craft consistently. Every trader experiences losses, yes, even the ones you admire. What separates successful traders is their resilience. They don't let losses mentally erode their discipline. How can you adopt this winning mentality? First, accept losses as part of the process. The sooner you internalize this truth, the sooner you'll stop seeing losses as failures and start viewing them as lessons. No one wins 100% of their trades. The goal is to stay profitable overall. Next, focus on your recovery process. After a losing trade, take a pause. Step away from the screens and reflect. Avoid revenge trading at all costs. Resting your mind helps you return with clarity and prevents emotional decisions from spiraling into bigger mistakes. Lastly, embrace a long-term perspective. It's easy to get fixated on daily results, but consistency means thinking about growth over weeks, months, or even years. Remember why you started trading and focus on steady progress instead of seeking perfection. Consistency doesn't come from motivation alone. It's built on habits. Here are practical tips to keep your trading disciplined every single day. Establish a routine. Start your trading day with a ritual. Whether it's reviewing market conditions, checking your technical indicators, or simply journaling goals, consistency starts with preparation. Avoid overtrading. Many experienced traders falter when they overtrade, either out of boredom or an attempt to recover losses. If you find yourself overtrading, revisit your trading plan and exercise restraint. Leverage technology. Use automated tools like stop-loss orders or alerts to prevent emotional decisions. Technology can be your best ally in sticking to your plan. 4. Engage with a support system. Trading doesn't have to be a lonely pursuit. Join communities of like-minded traders or lean on mentors for guidance, accountability, and motivation. Talking to others who've been through similar challenges can provide valuable insights. By developing these habits, you'll strengthen your discipline and create a sustainable trading routine. Let's recap what we've learned. Trading inconsistencies stem from emotional decision-making, lack of preparation, and overconfidence. But by addressing these issues head-on, you can rebuild your discipline and establish a strong foundation for success. A well-structured trading plan is the cornerstone of consistency, and executing it with precision is what separates successful traders from the rest. Staying focused during high-pressure moments and building psychological resilience ensure you can thrive even in the face of adversity. Remember, consistency is a journey. It's not about perfection, nor is it about overnight success. It's about fostering daily habits and making incremental progress. The markets may be unpredictable, but your approach doesn't have to be. Discipline, structure, and reflection are what transform skilled traders into consistently successful ones. Now it's time to put these strategies into action. Reflect on what's been holding you back, create or refine your trading plan, and commit to staying disciplined. Every trade is another step toward consistency. Watch your progress as the days turn into weeks and the weeks turn into months. So take a deep breath, recalibrate, and step back into the market with renewed confidence and focus. Success isn't about eliminating uncertainty, but about controlling how you respond to it. Stay the course, and let consistency become your biggest trading edge. The market is waiting. Go reclaim control of your journey today.